Hello everyone, thank you for tuning in today. My name is Christine from OrangeTee. I'll be sharing with you a very quick overview on how the private residential market has performed in the last quarter. According to URA price index, prices of private homes was down 1% quarter on quarter. However, on a year-on-year basis, prices rose 2.4%. This is the first decline after 3 consecutive increases, as you can see from this orange line down here in this chart. However, the dip did not seem to be as severe as what we have observed over the past crisis. For instance, at the onset of the last Asian financial crisis or even global financial crisis, prices of private homes dipped at a much faster pace during those period of time. In terms of market segment, prices have also dipped across all three market segments in CCR, RCR, and OCR. CCR represents the luxury segment, RCR represents the city fringe, and OCR represents the mass market segment. From here, we observe that the highest dip in prices came from the core central region, which is CCR at minus 2.2% quarter on quarter. The larger price fall in CCR could be due to a higher proportion of lower price luxury homes being sold, those below $2 million. So if you look at the data here, you'll notice that in the first quarter of this year, 58.4% of luxury homes were sold at this price range, whereas in the last quarter of 2019, it was 40.4%. In terms of rental, the rental market surprised on the upside. If you look at rental volume, rental transactions rose 2.4% quarter on quarter, as you can see from here. And in terms of rental prices, so overall rents rose 1.1% quarter on quarter and 1.4% year on year. And in terms of occupancy has also improved further last quarter. So overall occupancy rose from 94.5% in the fourth quarter of 2019 to 94.6% in the first quarter of 2020. So from here, you can see that most of the improvement came from the outside of central region here, where currently the occupancy rate is at a high of 95.9%. What about sales volume? Sales volume was slightly more muted. We see that overall sales volume was down 12.5% quarter on quarter, maybe because of the circuit breaker measures or because of the uncertainties that's facing the market right now. So this will have some impact in terms of the sales transactions. We have also noticed that there are fewer resale homes being sold as compared to new home sales. Our projection for this year, we have revised our projection for this year, taking into account the pandemic and circuit breaker measures. If the situation continues to be prolonged, the overall prices for private homes could trend between minus 2% to minus 4%. And overall sales volume could be between 14,500 to about 16,800. For new home sales, we feel that prices could be slightly more resilient. It could trend between minus 1 to 1%, and up to 8,500 new homes could be sold for the whole of this year. For resale homes, prices may come down slightly more, about minus 2% to minus 4%, while sales volume could be around 7,000 to 8,000. Rental index may also face some downward pressure, so it really depends on how the employment situation pans out. At the worst scenario, will be minus 3%. However, it may improve as more measures are being lifted. So our overall outlook for the market is that we feel that some price and demand weakness could still be in the market as part of the short-term consequence of the circuit breaker measures and movement restrictions. So although the long-term effects of the coronavirus pandemic remains uncertain, there is still a bright side to it, because Singapore's property market has always recovered after every economic crisis, and buying activities could pick up faster than other downturns given the pent-up demand from many weeks of home isolation. And one thing we want to share with our audience is that always remember, real estate market moves in cycles. Buyers should always adopt a long-term view in any property investment, and Singapore will remain an attractive investment destination. So we are seeing some buyers coming in right now because they perhaps believe that the current time, which is maybe approaching a crisis period, could be a good time to pick up some properties, because we have seen many buyers who have bought in the last crisis, 2008. They have made quite handsome profits over the last 17 years. So that wraps up my quick overview of the market performance for the private residential market. If you are interested, do look at our other videos that talk about the HDB market performance for last quarter. Thank you very much.